Ladies and gentlemen, we're back for another amazing meeting. If you are just joining us, well, this is how we do our market prep. It is Sunday, baby, and we like to keep an eye on everything that's going on in this market. So what am I going to do? Well, first, we're going to look at the S&P 500. We're going to check out the QQQs and the IWM. We'll go over the NASDAQ, and then we'll go over a few different other things like the dollar and the VIX Volatility Index. We'll go over a few of the overall stocks that I'm keeping an eye on in those hot sectors. And if it treats you right, go ahead and put those on your watch list as well. Of course, I'm here with the Discord family. I'm glad that everybody's here. Thank you so much for joining me today. And if you guys have any questions, again, unmute yourself, give me a shout out, and we will get to your tickers as soon as we possibly can. If you want to be a part of this, if you want to support your boy, go to David Worrell on YouTube. Hit that subscribe button. You can see it up here on my screen. It's right up here. It's the guy with the big head. There's lots of big faces on this thing here, guys. You hit that subscribe button. I'll appreciate it. I want to be here for you just as much as I want you to be here for me. And we are right here right now for the Robinhood Stock Market Watch List, okay? I'm an affiliate with Robinhood Stock Market Watch List. He allows me to post in his Facebook group, so I do my best to work for him because what he is doing works for me. So let's just jump right into this, guys, and we're going to start with, you guessed it, the S&P 500. Why do I look at the S&P 500? Because that is everyone's benchmark. That is everyone's benchmark. That is your mutual funds benchmark. That is my benchmark. I want to make sure that I'm doing better than 7 to 8% or 7 to 10%, if you will. I want to beat that S&P 500 because if I can't beat 10% of my full account in 1 year, then I might as well just take all my money and put it into the S&P 500. It's as simple as that. You might as well take all your money and put it into VTI or VOO. Now, I'm not going to lie, I do that. I like to dollar cost average into it. I do have money in the VTI. I do have money in VOO because I am a long-term investor as well as a swing trader as well as a day trader. I do it all here, baby, okay? And now we are going to go through the S&P 500 because we want to see where the overall market is. Where is the market sitting right here, right now? We need to know so that way you can choose whether or not you want to get involved with either long-term investing or even swing trading. Why swing trading? Because if the market's going up, it's easier to buy swings. It's easier to buy any stock that you buy into it. If the market looks like it's going to continue higher, well, it's better to swing trade in those environments. If the market's pulling back and things are looking bloody and you try and buy, well, guess what? You're a hell of a lot less likely to lose money in those situations. So let's look at the S&P 500. Here we go. We're going to blow this up on the big screen so we all can see it clear as day. The first thing you'll always hear me say is it above a 200-day moving average. Right here is the light blue area. Is it above a 200-day moving average? You're darn tootin' it is. It's well above a 200-day moving average. What else do we have here? Well, we have the 10, the 21, the 30, and the 50. You might say, Dave, why the hell do you use these moving averages? Well, because it helps clean things up, guys. When you have all this chop and you don't know where the actual overall market sits, you can look at these moving averages and it can give you a rough idea of where it is on an average daily basis. So this is over the course of the past 50 days. That's what's in green here, the 50-day moving average. And I know a lot of institutional ownerships will always say if it's below a 50, it's a dud. We don't buy anything below a 50. I usually choose the long-term investing. If it breaks a 200-day moving average, I'm totally out. If it's in above a 200-day moving average, I'm totally in. Okay, that's a long-term investment strategy. Now, for a short-term investment strategy or a swing-term investing strategy, I use the 21-day moving average. And where are we at today? Well, if we look back here, you can see 21, it bounced. 21-day moving average, bounce, 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 bounce. I sound like a rabbit right now, but this is what I'm trying to get through to you guys. Right here, when it breaks this 21-day moving average, what do we say? We're hands off. We're going to watch the market, and we had a bloody 6-day sell-off. That's not what you want to see in the market. That's not a swing trade environment. After it bounces back up, if you were a part of my Discord, as well as this one, I talked about this bouncing into that 50-day moving average. It bounced right into that 50-day and pulled back hard. Then, once we seen that it's set up above this $500 psychological area, I even talked to you guys about this as well. A pullback and a bounce off that $500, that psychological area, and then it bounced up. Look at this, and it gaps, and then it breaks through the 50. Now above all rising moving averages. This looks absolutely beautiful up here. And if you guys have been following my YouTube at all, you know I am begging for a pullback. Of course, I'm not rooting for its demise. I want to see I'm rooting for everyone's 401k, Roth IRA, and any investment strategy that you're in. But when we go straight up, we come straight back down. So we are going straight up here off these $500 lows. Look at this, with an average of this thing moving 1% a day. And in 1, 2, 3, 4, 5, 6, 7 days, this thing's been up almost 5%, okay? We want to make sure that this thing just doesn't get out of hand here. We want to see a pullback, maybe even some sideways action. Let this 10, 21, and 30-day moving average start to catch up to it. I just talked to my financial advisor. He called me, and I exited on this day. Why? Because I don't like to play when we break below a 21-day moving average. I exited here, and we seen this huge bloody sell-off. Now he's calling me, and we're way up here. And I said, brother, I appreciate you calling me back. I appreciate you wanting me to get back vested. I am risk on. I'm 100% risk on in this environment. If you guys watch my past YouTube videos, in my shorts, I say we are risk on, but we want to see a pullback. We want to see a pullback to that 10 and 21-day moving average. When will I call my financial advisor and tell him, hey, take that 100K and go ahead and put it right back in? I'm going to wait till it bounces off this 10-day moving average, okay? If I'm wrong and it breaks below that 50, I might call him back the next day. I'm very malleable, okay? I'm very malleable. I don't give a shit. If it breaks through the 50, then I'm out. If it bounces off the 10, then I am in, baby. And let's punch that gas. Let's find those swing trades and let's make some money. That's what we're here to do, right? And I hope you guys are on the same team as me. I really do. So here we go. We are above a 10, 21, and 30-day moving average, and not to mention that 50, baby. So we are looking absolutely beautiful in this market. But Dave wants to see a pullback to that 10-day moving average. If we can get that, that is when I'm going to start grabbing those swing trades. And we're going to go over quite a few trades very, very soon here, so pay attention. Next up is going to be the QQQs. QQQs is looking relatively the same. Now, I will say this, not to say it's not going to catch back up, but the QQQs is running a little slower on Thursday and Friday. Okay, they are above all the moving averages, but the 10 is not above the 50. All I'm trying to say here is we had a little stutter here. NVIDIA had a little stutter here. All the growth semiconductors that were pushing up through, that were carrying us at one point in time, had a little stutter here. So when we look at the QQQs, and you'll see when we look at the SMH, the semiconductor ETF, we had a little stutter. We had a little slowdown here, okay? So if we're going to keep an eye on these things, the QQQ, the overall tech ETF, has had a little slowdown here, okay? Now, let me get a sip of coffee here. Getting a little excited. Here's your first low, your new higher low. I like to see one more new higher low. I don't think we've put it in yet. That's why I'm saying we're going to pull back and we're going to bounce off of a 10-day moving average. I'm waiting for that pullback, guys. I really am. I do have a few things we can go over what's in my current account right now. We'll do that very soon. But remember, I'm a swing trader. The only thing I long-term hold in is VTI and VOO, and that follows the S&P 500. Next up is your small cap stocks. Looking absolutely amazing on Thursday and Friday. It really shook up the market. It showed some breath in the market. And I'll show you another stock ETF real soon here that shows you where that breath is. Now, the IWM, the Russell 2000, it's got over 2,000 stocks in it. It serves as the small and mid cap ETF. And you can see it's starting to diverge. The 10 and 50-day moving average, it's starting to line things up. The 10's above a 21, the 21's above a 30. We need these to be above a 50-day moving average. So everything's looking good. Everything's looking fine up here until it's not. This pullback was constructive. It was very constructive. But again, we want to see these moving averages catch up. And if you're just joining us, welcome, guys. Thank you so much for joining us up. Mo Wealth, I see you're in here. Scooby-Doo. Goodness gracious. I love the names, guys. And if I missed anybody else that joined up, thank you so much for joining. Bandit, good to see you. Good to see you guys. And if you guys are just joining me, my name is David Worrell. I like to do technical analysis. You can find me on YouTube. I'm an affiliate with Robinhood Stock Market Watchlist. Hit that subscribe button, baby. I'm here every single day, whether it's a YouTube short, whether it's in my own very Discord, whether it is bringing you the new data catalyst. I do it all. I do it all, and I do it for you. Very selfless act. Next up is the NASDAQ. So the NASDAQ, I notice, is just ripping. Like, I think we're going to have to pay more attention to the NASDAQ than we are the S&P 500, just because it is bearing on those all-time highs quicker than the S&P 500. We could just go ahead and reflect here where the S&P, well, I mean, that could be argued. I mean, the S&P 500 and the NASDAQ are neck and neck right here, so we're going to see who wins this race. But they're both looking very, very constructive, very good. But again, like I said, we want to see that pullback, guys. I'm not afraid to say it 1,000 times because it is so damn true. You want to see a pullback to that 10-day for it to be constructive. Anything that goes straight up, like, look, let's look over here, guys. Let's just zoom in on this. If it goes straight up and gets extended from this 10-day, what happens? Boom! It gets ripped right back down. That's exactly what happens. Every time, look at, gets extended, boom, rips right back down. Look at this, gets extended, boom, rips right back down. I mean, this isn't my first rodeo here, and I'm not just talking to jerk your chain. I'm talking because I want to protect people here. We are above. We are ripping, rip, tater chip, as I like to say. Dan Bob knows it. We're going to make t-shirts up with that. Rip, tater chip, baby. We are well extended from a 10 and 21-day moving average. I would not be surprised for this thing to gap down, you know, within the next couple of days. Dan Bob actually brought up a great point. If we look up on the economic calendar, you guys will find out this week that we actually have PPI at 8:30. We have Fed Chairwell, old Papa Powell, talking at 10 o'clock, and that's on Tuesday. The market probably trades sideways, and then Tuesday, old Papa Powell will drop the mic on us, okay? He'll probably say something hawkish to pull this back a little bit, help slow things down, help put a little burden on the economic expansion here, okay? Now, as you guys already know, I have been talking a whole great deal about the economics of the Fed rate stays and how I expect that we're going to have at least one rate cut by September, and we can go down deep into that very, very soon. But let's get through this, and if you guys have any questions about that, you're more than welcome to. But first, let me just finish up this, guys. We have PPI, 8:30 Tuesday. We have Fed Chair Powell, 10 o'clock. We have core CPI, 8:30, retails, year-over-year CPI and month-over-month CPI. We have retail sales at 8:30, crude inventories at 10:30. On Thursday, initial jobless claims. I mean, this next week, guys, is going to be absolutely ridiculous. So make sure you're using risk management. If you don't know what risk management is, you shouldn't even be trading. Let me teach you a thing or two about risk management. We've been going over it time and time again in our Discord. Everything's free. You're more than welcome to join it, guys. You know, I'm not trying to sell myself too much here, but everything's free. I'm not asking anything of you. You're more than welcome to join if you're willing to learn. You know, I don't want to talk in circles here. But next up is the Dow Jones Industrial. So the Dow Jones here, good to see you, Scene. Thanks for joining us. Dow Jones Industrial, do I have to say it? So extended here, guys. The Dow Jones Industrial is your grandfather's ETF. This thing is bearing on its all-time high, very close. Look at the last time it got this far extended. All right, if we just take a measurement here, look straight up. Okay, it's extended from its 10-day 1.85%. And if we just measure off this, look at this, 1.85%. Look what happens when it gets extended that far. Rips right back down to this 10-day moving average. I don't like this. I don't like the way this looks at all. I'm expecting a pullback. I think it's going to be a constructive pullback. Okay, I do. I think it's going to be constructive. Until it breaks that 50-day moving average, I still have hope for this overall market. I think we can have a beautiful push to the north side. But until that happens, guys, until we see that pullback, I'm not ready to go full account. I'm not ready to go full in on this, okay? And if you guys don't know already, I am sharing my screen. You're more than welcome to watch it so you can see what's on my screen right now. Next up is the semiconductor ETF. I just shortly spoke about this a little bit ago. We are still extended. Again, you're going to hear this. It's a relative theme. We are extended from the 10-day moving average. We're waiting for that pullback. Now let's see the equally weighted. This is a beautiful thing. Yes, the equally weighted is also extended, but let me explain to you why I like the equally weighted to be extended. Because it's not just one ETF that's holding us up. The equally weighted ETS, or the RSP, is the equally weighted S&P 500. It's showing that not just the tech, it's not just healthcare, it's not just, you know, consumer staples. Okay, it's not just discretionary. It's not all just one specific ETF. This is showing us that it is equally weighted. So the S&P 500 is above all of its moving averages over an equally weighted area, right? The tech's not just pulling us up. We're not just being drug along by tech anymore, okay? This is showing us that there's constructive movement in the overall market. So I like seeing this. At least we're extended on the RSP, and we're not just extended on the S&P 500 because of one ETF. You understand? So this is looking really, really good. Let me get a sip here. That's some good coffee. I like cold coffee. Next up is the dollar. We want to see an inverse correlation to the dollar, and you guys can see we are actually showing a bit of a head and shoulders here, which is going to be great for this overall market. We had this huge push up since 2020, obviously. We're going to have this huge push up. We had a pullback here, and then we had a little scare, right? Pulled back, and now we had another little scare. But we want to see an inverse correlation. We want to see the dollar come down, and then the market will go up. Because if your dollar is worth less, meaning it comes down, if your dollar is worth less inflation, if your dollar is worth less, then we're going to take our dollars and we're going to put them into something more speculative like a stock. If you put this dollars into a stock, then those stocks will start to go higher because you're going to have more demand for those stocks, right? Right. Bitcoin. Next up is Bitcoin. We'd like to take a look at Bitcoin because the mutual funds are looking at Bitcoin. Right now, Bitcoin is well below a 50-day moving average, and it's looking like a big drip. I don't like this continuing to pull down like this, okay? I do believe in Bitcoin. I think eventually it might come back up there. Of course, nobody really knows what's going to happen with Bitcoin or any stock or anything for that matter. And if somebody tells you they know exactly what's going to happen, you're listening to the wrong guy. They are lying to you. But Bitcoin, not showing too much constructive abilities right here below all of its moving averages and looking absolutely weak. Every time we pop up into this trend line, we start to sell off here. Okay, it's not looking good. Not looking good for Bitcoin. So we're going to see what's going to happen with the overall Bitcoin sentiment. Now, gold. Gold, baby. Gold is looking absolutely interesting right here. We had this downtrend and it broke above. Now above all of its moving averages. It really looks like it's still following the S&P 500, which is very odd. It's a huge oddity to me, guys. When you see it breaking above these with the S&P 500, gold has been following the S&P 500 for quite some time. And if you guys remember, I talked about this base breakout a long time ago. Way back here. We had 1, 2, 3, 4 areas of inflection, and then you have this pivot point where it just rip, tater chip to the north side. The only time I could find to get into gold would have been right here at this trend break. If you guys have been with me for a while, you know I like trend breaks and base breakouts. This was a beautiful trend break. This right here was a beautiful trend break. I was actually shooting live when this trend break happened, but I have a bearish sentiment to this, so I cannot go long because I will not have the conviction to hold on to this. Now, this might continue higher. It may. It absolutely might. But because I have in my head that I'm bearish on gold, I cannot get it out of my head to go long. I have a hard time doing that. Now, I always preach it's all about price action, so it's not about what you think. The market does not give a shit what you think whatsoever. It does not. And I'm a firm believer of that. But if I already have it in my head that I'm bearish on the gold, then for me to go long is counterintuitive, and it will shake me out a lot quicker than I would want. So gold is looking very constructive. I can't really talk bad about gold when it's above all these moving averages, and the moving averages are rising to the north side. So it looks very good in this area. Now look at this. This is what's very interesting. This is the VIX Volatility Index. You might be new to the VIX Volatility Index, but I like to consider this my fear gauge. Why do I call it a fear gauge? Because volatility, when you have sustainable volatility and the market is doing well, you have low volatility. But if you get a ramp up in a lot of volatility, you get these huge sell-offs. And I can show you back here. It's very easy to show you. You know, we have our COVID right here. This is COVID. And the financial crisis is right back here. Okay, '07. I'm sorry, that wasn't it. Let's go back right here. There's your financial crisis right here. So when you get these huge excerpts of fear, okay, this was the Middle Eastern tensions right here. Okay, now look, we are just dying off. There's like no fear in this market whatsoever. You know, so some might say, well, because we're so low, we're going to get a nice little pop. Well, that little pop that we get, that's what I'm looking for. I want to see that little pop. I want there to be a little bit of fear in this market. I don't want it to shit the bed. I want to see a little fear in this market. Let it pop up. Okay, let's pull back to that 10 and 21 day moving average like I've been preaching about. That's when we want to grab our swing trades. That's when we want to grab our longs when everybody else is afraid, when there's blood in the streets, like old Warren Buffett has said. Okay, I got a few more we're going to go over here, and then we will carry on with some of the other names. So I like to go through a lot of tech just because tech always seems to be hot. We got NVIDIA. NVIDIA's setting up beautifully here. There was a trend break here. It broke back down. Then it popped back up. We have earnings that are coming up very soon. So we have NVIDIA's earnings is on the 22nd. So that's in 10 days, guys. 10 days. What is this thing going to do in 10 days? Well, I can almost rest assured that this is going to stay within its range. It'll probably float around between 850 and 950. It'll probably just bounce around in this area till earnings comes because nobody's going to get too bullish. Nobody's going to be playing too many breakouts here just because that's the way it usually goes with earnings, okay? Unless they come out with like a pre-earnings or, they come out with something wild just to get the ball rolling, which they could do from time to time. Usually this thing's just going to kind of just trade around sideways for a little bit. So we'll see what happens here. But of course, I'm a huge component in NVIDIA. I've been preaching about this thing since the $500 break right here. Absolutely beautiful. We made a ton of money on this. Could have made a lot more, but guys, it is what it is. You only get a big chunk of the meat. You can't eat the bone too. So, all right. Next up, I like to take a look at SMCI. Simple reason, we already had earnings, and look at this beautiful thing. I love trend breaks. Dan Bob will tell you. I do love a good trend break, and it looks like this thing is about to break trend. The only thing I don't like about this, guys, below a 50-day moving average, below a 30, below a 21, just above, well, actually not even just above a 10. So this thing's got a lot of proving to do. It's not following any moving averages. It's not doing much. This trend, this might be the best place to short. I don't know yet. I'm trying to stay hands off this to let it speak to me. Maybe it creates a base here, and then it has a big drip, another big sell-off. I made a lot of money during this area right here. So when it broke down this area, no, that was ARM. I'm sorry, guys. I'm thinking of the wrong stock. On ARM, we made a lot of money shorting it. But SMCI, it's one to just keep an eye on because of this big downtrend. Now, Tesla, I actually bought into Tesla right back here. We made some money on the north side, but once it started to pull back to my average, we switched to the short side, and we made money to the downside. So this thing is still falling. Of course, I still wish I held my short sale trade, but it's okay. Like I said, we're just grabbing the meat of the bone. We're not trying to chew on the bone as well. Uncle Tesla, I've been telling you guys, if it's below a 21-day moving average, there's nothing good that happens below a 21-day moving average. Just like my grandma used to say, nothing good happens after dark, honey. Nothing good happens below this 200-day moving average. Sorry if I said 21. 21 as well sometimes, but the 200-day moving average, nothing good happens under a 200-day moving average. We also have Netflix here, guys. Netflix, beautiful bounce off this low. Zamora will remember, actually. This was the turnaround. This was the bounce off the $500 area. When it broke through this, that should have been my key point to take along in this trade. I wanted to take the break of this area. I ended up losing a very, very small amount here, but when it broke through this trend, and it did it on volume, that should have been my go-ahead. That should have been my, hey, time to get a piece of Netflix. Even 25 shares would have made my account. That would have been a beautiful move. But instead, we went in Tesla, NVIDIA, and there was one other stock. So we did make some money. We just didn't do it on Netflix. But Netflix, a beautiful trend break right here, guys. This is exactly what I'm looking for. These trends right here, that's what I'm looking for. Look at this trend back here. Boom. That's what I'm looking for. Undercut, rally, beautiful move. Made money. That's what we do. All right. Next up, Microsoft. So Microsoft did a beautiful job in this area. It pulled back, it bounced, and now it's getting above all of its moving averages. This is what I call the murky water right here. This will be the test. And we'll check out Amazon too. We talked about Amazon, about those murky waters, and now look at this thing. Wham, bam, thank you, ma'am. Above all of its moving averages, also above all of its previous highs. This thing landed a brand new all-time high at 191.70 just on Thursday, guys. So this is absolutely beautiful. This could create a whole new trend for Amazon, and it might continue higher. If we look at the weekly here, you'll see why it's such a big deal. Let's zoom out. Look at this. Amazon made this huge push up. We had a huge pullback from those COVID lows, and then it bounced up and it headed higher. Slow journey, big boat of a stock, trillion-dollar company, I do believe, now breaking above these murky waters and heading to the north side. That's what we want to see. There's a lot of money in the S&P 500 through Amazon, and we want to see this thing continue higher. It helps everyone's 401k, everyone's Roth IRAs, everyone's stock performance portfolio for any amount of retirement. Meta, we could say the same damn thing. This thing dropped over $100 on earnings with good reports, and then it bounced right back up and started heading up. Now, I do have to say there's going to be some resistance here, guys. So I could draw the murky waters for you if you'd like. We'll just go ahead and do something like this. It's right in there. It's right in there. But if it can break above this, then come back and test it as support, this would be great to see it continue higher. Absolutely would love to see that. All right. Next up is Apple. Why are we looking at Apple? Well, look at the earnings and look what happened with Apple. Absolutely beautiful. Broke up through here, holding above that 200-day moving average. When it was down here, we were playing the shorts. Every time it popped up, we would want to short this thing. I only caught it one time, and it wasn't a lot of money because earnings was coming up here, but these pops, we wanted to short here. You can see this beautiful downtrend posed a great area to short. Then earnings comes up. This is a big reason why I say do not trade on earnings. We don't take earnings trades. If you're in a trade, you better get out. You don't know what's going to happen, okay? Don't shoot the messenger here, because as much times as you would have said, oh, I would have made money, well, you can lose your ass too, and it's not fun to gamble, in my opinion. If you want to be a good trader, if you want to learn how to trade the right way, then don't take a gamble on earnings. Let's play these things right. Let's do it the way we're supposed to do it, all right? We get hands off on earnings, and we play after earnings now. This thing, earnings gap up, absolutely beautiful. It pulled back. It's trading sideways. Let's wait for this thing to form a base, a nice base. If we could form a nice base breakout right around this $185 area and then break to the north side, that might be a nice area to get in. But earnings is killing it, guys, because if you look at Google, the same damn thing. We were talking about how strong Google looked during that bloody 6-day sell-off. This thing just traded sideways through all of that. I was telling you guys how strong Google looked. And look at this. Earnings came by, and it said, yes, you're damn right we are. We are strong as heck. Google is one of the leading stocks in the market right now, along with quite a few other things, but Google is taking the cake home. So awesome job to Google holding this 10-day moving average. Maybe we play a trend break here. I don't know. Maybe I set a nice little an alert here, so that way I'm aware of it when it does break. A few honorable mentions. The Snapchat. The Snapchat came right up to this line here. Of course, I didn't draw this line. This line was already here, guys. That's resistance, right? And you can see it came right up to that line, had a huge pullback, so that would have been a nice short. But we're going to see what it does here on this pullback. Maybe it holds on to most of its area. Maybe it trades sideways. Maybe it makes a base. Or maybe we find ourselves a pretty little trend here, and it breaks above it. Either way, I would love to be a part of that. If it does, we might see some continuation on that. Either way, we're going to get alerted, and then we'll see if there's volume to back it up. Guys, if you're just joining me, I love to do this. This is self-preservation, so I hope you don't get too annoyed with this. My name is David Worrell. I am recording this right now for our YouTube. I am a YouTuber, although I don't like to call myself a YouTuber. I love stock analysis, guys. This is what I do. I go over the stocks. I have an awesome community. We have our own Discord as well. It's absolutely free. You can join it. I'm an affiliate with Robinhood Stock Market Watchlist. He's not here today, unfortunately. I don't know what's going on with Carlos the past couple weeks, but he's not here, so I'm doing my best to take over for him. I hope you guys love it. I hope you enjoy it. And if you do, hit a like button. Go ahead, hit that subscribe button for me if you want to see more of me. We also have, like I said, that Discord. It's absolutely free. You're more than welcome to join it. It's what we do, baby. We get together. I see quite a few of my Discord members in here. Norm, good to see you. Dan, Bob, Zamora, it's good to see you. I think Night Owl's with us too. I'm not 100% sure. But guys, you're more than welcome to join us. We're a good group. We all like to help each other out, and you're more than welcome to join up too. Especially, I do appreciate everyone in here as it is, guys. You're supporting your boy Mo Wealth. Mo Wealth is in here. Awesome, guys. I appreciate you being here. So if you guys want to be a part of that, hit that subscribe button. Look me up on YouTube, David Worrell on YouTube. You see this big ugly mug right here? That's me, baby. Go ahead and click that subscribe button. All right, now we're going back to it. What I like to look at too is oil. Okay, I'm waiting for oil to do its thing. We had a huge push up, a huge pullback. If it breaks through this, we're going to find some oil names. We're going to ride that to the north side. We did have a big bounce up, and then I ended up shorting oil here previous day. ENPH, I took a short on this. It bounced back up. I exited. We made some money on the ENPH. I think it was like a small $500 or $600 on it, but it was a beautiful trade. I really like to see that. And I think that's good for the old Fang Mang stocks. I'm going to take a quick break though, guys, and ask you, is there any stocks that you want me to take a look at before I go through my watch list? I have a ton on my watch list, and I'll probably be on here for another, I don't know, 20, 30 minutes doing this. So I'd like to take a break, give you guys a chance. You're more than welcome. Let me see if I can unmute some of you that were accidentally muted. Let's see, Jimmy, you're unmuted. Minnie, I'm going to unmute you. You guys are more than welcome to let me know if you guys got any stocks you want me to take a look at. You're more than welcome to give. Oh yeah, that's actually a really good one. It's very popular, and there's a lot of there. If you were muted before, you're unmuted now. You're more than welcome to bring them up. So let's bring up Coin, guys. Let's bring up Coin. So Coinbase is on a big downtrend here. The issue I'm having with Coinbase right now is it's below all of its moving averages. So what we need to see for Coinbase to be more positive is we need to see a base start to form, some resistance here, okay? You may have said that over here for its resistance, but now we're kind of breaking through that area. You see this big downtrend on my screen? It's a big downtrend, and it's below all of its moving averages here. So because it's breaking down, we need to find an area where it's starting to create new higher lows. What do I mean by new higher lows? Well, this, if we look back here previous, somewhere around February, you can see it made a base here. We could call this a base right in this area, okay? And then it made new higher lows. So this would have been its low. This would have been a new higher low, and this would have been a new higher low, right? And then we have a beautiful trend right in this area. And then we could have found a nice area to take a long in where it's bouncing off these 10 and 21-day moving averages. But if we go over here, the only issue I'm having here, brother, is that it's just continuing a downtrend. And every time it pops back up, it's getting sold off into. So I like Coinbase. I like the idea of Coinbase. They do have a lot of good ideas, and I do think there's a good future in Coinbase. But as long as Bitcoin comes down, which we can see that it's below all of its moving averages, I think Coinbase has a lot of work that it needs to do. All right. Yes, sir. Actually, I still have the markings out when we talked about GME. And look at this. You can see here the same thing that I drew out is doing exactly what I wanted to see, except for it's in more of a condensed area, right? So instead of it being drawn out here, so like here, we'll just zoom in on a bigger time frame. You see how we wanted to see this thing go up, down, over the course of like 4 or 5 days? This thing's volatility went up, down, right inside each, look at the range here. I drew this out, I drew this out. Remember this? I drew all this out for you. And then it finally broke through this area. It's looking constructive. It's looking very constructive. The only issue is, again, if you were to take this trade, you have to find an area that you're willing to use for a risk. So when I look at any trade, I'm going to say, well, what am I going to risk? So if you wanted to take this trade and buy it at 17.45, where are you going to risk this? You know, at 16.92 or 15.34, its previous area of resistance, which now should act as support. You know, but you can see it broke up through this area, got sold off very, very hard. So this one's a very hard one. But look, this huge downtrend has been broken, right? It created this area of resistance and support, and it broke up through. So now when I look at GME now, it's showing a lot of constructive abilities, right? Just like on the last stock, I said we need to see new higher lows. It needs to be above a 200-day moving average. Well, now we're actually seeing that for GME, right? Now, this is a meme stock. We already talked about in the previous talk, we have areas of resistance at 80, 60, 45, and 25, okay? Huge areas to break through, right? A lot of bag holders up here. But I will tell you this, when this monster starts to get momentum, it can really push, okay? Again, these aren't buy or sell recommendations, but if we've broken through in a downtrend over the course of many, many days, months, years actually. When did this happen? Back in 2021, guys. So we're talking 3 years of a trend that it just finally broke. If all of this resistance, we can just cancel it out and act like it's not there, I would say, yeah, we need to do something with this, you know? So I would suggest, if maybe I shouldn't suggest, I'll put it this way. If I were to take a trade on this, it would be the amount that I'm willing to lose. And then I would just hold on to this, right? The whole diamond hand situation, that's what would come into play here, because the best place that you can risk right here would be this resistance at 1537. So if you got it in at 1746, you're going to risk $2 on this trade. It's a very loose risk. When I take my risk, I like it to be very tight, within pennies or within 1 or 2%. This thing has the opportunity now. It is showing constructive ability to push higher, yes. As where last week it pushed right up into resistance, and I expected this thing to sell off. This thing is now pushed up. It held that area and broke through that area of resistance, so it's showing some construction. All right, guys, can you tell me the ticker name one more time? Taiwan Semiconductor, correct? Yeah, absolutely. So I'm glad you brought this up. Actually, I needed to put this on my watch list. I watched this. I was watching this just the other day. So it had earnings and it pulled back. This is what I call an undercut and rally. So we had a huge push up here, a nice sell-off. It traded sideways, and then it had this undercut, meaning it broke down below all of its moving averages and a lot of its area of support. And then what happened? It got bought right back up. That's a huge, a bullish sign here. Not only did it get bought back up, but now we're getting these big gaps. We got a big gap here and a big gap here, and it broke above this area of resistance. So this is looking extremely constructive, because if we look back here on the daily, guys, always look to your left. You can see this area of resistance here at 142. We'll just call it 143 here. And then if you come all the way over here, you can see it's touched it. 1, 2, 3, 4, 5, 6, 7, 8, 9. This was a huge area of resistance here. And now it's above it all. All right. It's absolutely, not only is it above it all, but look at this. It did it on volume. You see this big volume push? This is your average volume over the course of 21 days. This broke right up through that area. That's a huge bullish sign. So I absolutely love Taiwan Semiconductors. Now, when I look at something like this, of course, I always need to look at it on the hourly as well, because I like to take my trades on the hourly. And you can see this thing gapped up in the pre-market, right? It pushed up in through this area, broke above all of that resistance right here, and then traded up here. My only issue with this is I can't take a trade on this right now. I have no way to manage a tight risk on this. So yes, I love Taiwan Semiconductor. Taiwan Semiconductor fuels NVIDIA, so it looks very, very good. It looks very constructive here. So now personally, I have to wait for it to wait for these moving averages down here to catch up, for it to get tight on those moving averages, whether it's a base or a trend breakout. That's my type of play. So yeah, I'm glad you brought that up. It's on my watch list. All right, guys, anything else? Want to make sure everybody gets a voice here. Don't be shy. You can ask anything. Hey. Is this Night Owl? Sorry. Is this Night Owl? What up, dog? All right, what are you looking at? MEEE? Very interesting. Okay, can you give me the ticker symbol one more time, just a little slower for me? Oh, okay, me. Gotcha. All right, cool. So this thing moves at 3.4%, so it's a little bit quicker. The reason why I look at this average daily range, which is right here, guys, which, by the way, is ADR is average daily range. The higher the ADR percentage, the faster this thing moves in a day. Okay. Now MEE. So this has something to do with AI. You said. Let me go ahead and read a little bit about this here. So McKenzie Max Divergent EMG. Oh, N as in Nancy. Okay, Nextera Energy. Well, look at this beautiful stock that you're showing me here. I like that. So this is an average daily range of 2.3%. Now this makes more sense because usually your energy stocks are a little bit slower. So this moves 2.3%. It's a little bit slower of a mover, but you can't complain with this. Again, you guys are going to hear a theme from me. Now, if you would have caught this play down here where it created this trend and this breakout, it'd be absolutely perfect. But right now, it's just running away. This energy stock looks absolutely beautiful. It's obviously trying to lead here. It's got a lot of this overhead resistance, but when you get these big pushes up on volume here, if you wait, if you're patient and you're watching this over the next course of the next week or two, you might see some sideways action here, right? And then you'll find a base, something like this right here, or a trend breakout, something like this right here. And if that happens, that would be a better area to take this trade. So it's tighter on this 10-day moving average. See how when it gets tight on this 10-day moving average, but when it gets extended like this, it pulls back hard. Right now, we're extended. So I cannot personally get into this. It might be something you'd want to get into, but if you got into it and you were in my Discord, I would say, hey, bro, I think that's a little extended. I think you just had some fear of missing out. So I would like to encourage you to be patient. Did you? Good. Can you give me the price, your average price that you got into it? 55? 65. So right here. So damn near right where okay, so that's beautiful. That's absolutely beautiful. If you got it at 65, you either took it here with a fear of missing out trade and held on to it through this bloody sell-off, or you got into it after it broke the top of that area. So that's a good price to get into it, okay? Right here. I like that area. So I'm rooting for you. I think it's a little extended here, but not to say it can't continue, not to say it can't pull back, trade sideways for a little bit, or even just trade sideways up here and let the moving averages catch up while it continues higher. So I like it. My biggest fear for this stock would have been right here, okay? And look at this. It blew through it. That would have been my biggest fear area for this stock is this price at $70, and it didn't even look at it. It didn't even know that the resistance was there. Look at that. Because this acted as support at 70 so many times, I see it 5 times, 6 times here, that $70 area was acting as support. And then you come over here and you can see it acted as resistance. It broke through, it popped up, and then it just took a shit. Like this is a colonoscopy on this damn stock, And then it creates these new lower highs. I mean, look at this. It's beautiful. You got this low, a new lower high, and a new lower high, and then boom, here you go taking it, and now it's rip, tater chip to the north side. I think this is very, very constructive for the stock. It would not surprise me, though, if when it pulled back to this 10-day and 21-day moving average and retested this $70 area. So, you know what? What I'm going to do, just since we did a nice little deep dive, I'm going to go ahead and set my alert for at or below this area. That's what I'm going to do. Because you know what, brother? I'm going to join in with you. If this thing wants to come back and retest 70, even though it's a slower mover than I like to play, I like the looks of this stock. I like the way this looks. If this thing wants to pull back and bounce off 70, we're going to go ahead and let it. And I'm going to be a part of it with you, okay? So I got that on my watch list too. I love it. Thanks for bringing that up. Guys, before I carry on with my watch list, do we got anything else? Anything else you guys want me to take a little peeky gander at? I'm sorry, which one? Well, who said what? Stephanie, go ahead. No, not Stephanie, sorry. What's up, hacker? I'm not sure if I've seen you in here before, but it's good to see you, brother. I'm glad you're in here, man. Yeah, okay. I can't see that picture. It's a little too... Oh, there it is. Okay, I see the pup. What kind of dog is that? Is that a boxer? It's hard to... Oh, okay. It's a small picture. I couldn't see it. All right, well, thanks for joining us, brother. I appreciate you. So, if you want to talk about Tesla when it comes to like the valuation, or what do I think when they come out with different products and services and stuff like that, I'll tell you this: the only really excerpts that I can give you with all of that is I hope so, right? I know Elon Musk likes to come out and he likes to talk a big game. He's the CEO. He's a salesman. He's got to sell the stock. He's got to sell his product, right? He's got to keep the people hyped up. That's his job, and he does a damn good job at it. But when I look at the overall stock of Tesla, I do one and one thing only. I look at price and I look at analysis. Right now, the price is at 168.47, and the analysis tells me this is in the shitter. It's below a 200-day moving average. The 200-day moving average is pointing down, and just like my grandmother told me, nothing good happens after dark. Nothing good happens below a 200-day moving average. So when I look at this thing, I've been looking at this thing very constructively when we were in this area because of earnings. We had a big gap up on volume. I had a buddy that lost $20,000 trying to take Tesla puts way down here. I don't know why you'd do something like that. It's crazy. You don't play earnings, damn it. And he goes, I know. But if you knew, you shouldn't have did it. 20 grand? Are you kidding me? How are you going to tell the wife about that? So anyway, this thing ripped up and it was on volume. It ripped up again on volume. So I was waiting for this pullback. You can see a beautiful trend here. You can see I got in here when the whole market bounced off the 50-day move, the $500 psychological area, and I played this to the north side. But I knew, and I even said when I was holding onto the stock, that I don't believe in it. I'm holding on to it for the ride, and I sold a lot of it on this push up, but I did not believe in it because it's below a declining 200-day moving average. So unfortunately, I can't really answer your question directly. All I can do is a cute little workaround here where I say, but the technical analysis says this, because I don't want to try and act like I know something that I don't know about a stock, okay? I know the technical analysis. I can give you great analysis. I can follow the price. I can follow the action because that's the only way I can make money. But if we start talking about the PE ratios and the what the earnings is going to do a year out, not to put it bluntly, I don't give a shit. I don't care what he comes out with. I don't care what he promises until he starts putting up those numbers and the quarterly earnings are coming out 100% year over year than previous to the last quarter or the last year, and the market starts moving up higher with it. That's when we're going to make some money with it, okay? That's, it's like put up or shut up kind of thing. You know what I mean? So, that's what the analysis is showing us here, bud. That's exactly what it's showing us. You know what I mean? So, you can't really argue with the analysis. You can't. If it's heading down, and especially here's my biggest quarrel, right? The market was continuing higher. Look what Tesla was doing. The market has been continuing higher since October, right? It popped up here a little bit with the market, but it sold off. And the whole time, while the market continued higher and higher and higher, this Tesla just sold off. It was weak. It was weak. It couldn't lift a 10-pound weight for all I care. This thing just kept selling off below all of its moving averages. So, like I said, I can't answer your question directly, but when I look at this stock, it's in the toilet until it's not. Until it gets above this 200-day moving average, start showing new lower highs. We had one low. We had a new lower high somewhere around here, but now where's our third one? It looks like it's coming right back down. It's going to retest this 160. It is. You're right. You're absolutely right. This is your long-term downtrend. It's on a short-term downtrend and even midterm. It's below the 50-day moving average as well. So, you're absolutely welcome, brother. All right, guys. Any other questions? Any other stocks? Yeah, I think BNK, BAC. Thank you very much. Who's that? Yeah, who's that asking? Stephanie. All right. Thanks for joining us, Stephanie. I'm not sure I heard that voice yet before, but thanks for joining us. I appreciate you being here. So Bank of America. So you know what the great thing is? We went over Bank of America before. We went over Goldman Sachs. There was a few other financials that we went over, and I had a financials watch list up here. I could probably rip one up here. But it's very odd to me. Let me take a sip here. It's very odd to me. So with the financial rates being stuck at 5.5, technically 5.33, but who's counting? I am. 5.33. right here, why are the banks doing so well? It's so odd. I even asked my financial advisor, I said, can you explain this? Can you explain this to me? If the Fed are holding rates at such a high area, why the hell are the banks still doing so well? I mean, Goldman Sachs is an all-time new high. You know, Bank of America is on this beautiful uptrend. Why are these banks doing so well? But that's why we don't try to make sense of it. We use technical analysis and we play those trends. Now, if we look at Bank of America, you can clearly see here, we're on a midterm uptrend. We're on a long-term uptrend. It's past this 200-day moving average. This 200-day moving average is curling to the north side. It's looking very, very constructive here. Right now, it's just a little extended from the 10-day moving average. We could even draw a nice little trend line here so you can see where the extensions kind of sits, right? You could draw kind of like a long-term uptrend line just kind of like this so you get a better idea of where we're headed. That way you can see the channel here. You see this channel? This is a beautiful channel here. Now this thing might come right back down to this channel, but either way, we are on an uptrend. Would I buy here? Absolutely not. Personally, I would not buy up here just because we see the area of support. This 50-day moving average looks like the area of support. Okay, now Bank of America is a big boat of a stock. It's a slower mover at 2.1%. This has got a long time to move. If you bought in somewhere past the 200-day moving average and you just kind of got into this thing willy-nilly, you're in a good spot. And I would say you can continue to be in a good spot as long as it stays within this channel. If it starts to break down this channel, I think that's when we're going to have some issues. Now, we had the earnings come out. They beat earnings by I don't know what, 10 cents, something like that. And they looked really well. You know, they pulled right back down to their area of support. The earnings showed true and it continued right back up. So Bank of America is looking really, really good. I really like this area. There's one issue that I see here, and that's this area of resistance, okay? We could even mark this area all the way back to here. Why is this an area of resistance? Well, this used to be support. Excuse me. This used to be support. If we zoom in on this area, you can see it's bounced off once, twice, 3 times, 4 times, 5 times. So we know that this area at $38 is an area of support, and now because it's below it, it's an area of resistance. So here we are. We come right up to that area. Now look, I drew this out all the way to the left, guys. I drew this out over here. I didn't draw this out because of where it's at now. I drew it out because it was over here, and I was showing you where the area of support was, and now it's the area of resistance. Now if we zoom in where we're at today, look it. It's not magic. This is technical analysis, and it's loud, and it's true. It's right here in your face. Look at this, guys. This is why I love it. This is why you can make so much money just using technical analysis, okay? So thanks for bringing up Bank of America because this is at an inflection point here. If this thing wants to break up through this area of 38 and wants to continue higher in this area on volume, we need to see volume though. We're not seeing volume. If you look down here, we're not seeing above average volume to push through this. But if it can break through this area on volume, that's going to be a great sign. Now, because it's not on volume, I'm going to expect this thing to kind of pull back. Let's say it pulls back down to here, bounces back off this area, maybe tries again. Or maybe it just does this over and over again, gets really, really tight. I don't know. But what I do know is this is the area of inflection. It's either going to shoot up from this area or it's going to pull back. But we need to see volume. We need to see volume on the push-up for me to want to take this trade. I'm going to set an alert on this. Thank you for bringing that to my attention. Yeah, you're welcome. Guys, I want to take a look at Goldman Sachs just while we're right here. So look at Goldman Sachs. You know, same thing with Goldman Sachs. Look at this. All the way back here, guys. You draw this area of resistance, right? And it breaks up right through this. Look at this. Resistance, resistance. From all the way back then, it breaks up through it. It pulls back, it retests. Look at that. And when it broke up through, what did it break up through on? Look at that. Right here. Breaks up through on volume, guys. That's what we're looking for. So if Bank of America can do what Goldman Sachs did, they might have a beautiful run just like this. Absolutely love to see it. Yep. Put financials on your watch list, guys. This is looking really good. Now, Goldman Sachs is a little extended, obviously. It's a little extended from the 10 and 21, but the Bank of America is definitely one. BAC, it's definitely one we need to keep an eye on right here, especially with Goldman Sachs, rip tater chip to the north side. Okay, anybody else got anything for me? I'm going to pour a cup of... Sorry about that. I had to grab some more coffee. My throat's getting a little dry here. All right. Did you say Etsy? Can you give me the, is it ETC? Can you do it one more time for me a little slower? I'm sorry. AMA? C. AMAC. OT. Oh, I think I know this one. Yeah, I know the stock. Okay, cool. Man, I tell you what, I'm going to be honest with you guys. Usually when you get an open mic and you say, hey, you can give me whatever stock you want, let me take a look at these stocks. You guys usually, or not you guys, but usually we get a big group of people giving me all these shit penny stocks. You guys are giving me some good stocks. You guys are watching the right things here, guys. It's absolutely beautiful. So I appreciate every one of you. Look at this Applied Materials. You can already see, look at this base breakout. Oh my gosh. I'm putting this on my watch list right now. Let's put BAC on here. Let's put, and you know, this is all constructive, guys, because when you see a lot of setups like we're seeing tonight, that shows very constructive material for the overall market. Because say all of these start to break out, say every one of these start to break out all at once, what do you think is going to happen to the S&P 500? That thing's rip, tater, chip to the north side, baby. So back to AMAT. This is Applied Materials. We can read about Applied Materials, AMAT, really quick. So Applied Materials, if you're not familiar with it, it's manufacturing equipment, services, and software to semiconductors, displays, and related industries, and it operates through the following segment: semiconductor systems, applied global services, and display and adjacent markets. The semiconductor system segment includes semiconductor capital, yada, yada, yada. So they help service the semiconductors, right? So if SMH, which is the semiconductor ETF, does well, you're going to see Applied Materials do well. And it looks like the semiconductor ETF is doing well. It's above a 50-day moving average. So if we look at AMAT, you can see this base breakout here is starting to really set up. Looks absolutely beautiful. There's only one issue I'm seeing here, guys, and that is earnings is on the 16th. Okay? That means I cannot play this. Now, I say this very, very often. Okay? Earnings ruins everything. If this thing starts to break out, I can't play it because earnings is coming up. Maybe earnings comes up and then it gaps up, so I couldn't get into it before it gapped up, right? Maybe earnings comes out and this thing just, has a seizure. Like this thing just fails, like it can't keep itself up, and it just fails. I don't know what's going to happen for earnings. And if you do, give me that insider information because I want to get rich too. You know what I mean? So Applied Materials is looking very, very good here. I would love to see for earnings that it kind of just steps around here for a little bit, just trades sideways, maybe gets really, really tight, and then lets me in on this breakout at 215. But I'm telling you guys right now, if this thing breaks 215 on volume, it's heading to the north side and it's going to head up quick. This thing only moves currently 2.8%, so it's a little bit slower of a mover. But I'm telling you, when you see base breakouts that happen over the course of 3, 4, 6 months, you're going to see them move high. You're going to see them move fast. This average daily range is going to move up faster if it breaks this 215 on volume. So definitely keep that on your watch list, and thanks for bringing that to my attention. Which one? Who was that gave me that? Nido, thank you very much. Appreciate that, Nido. All right, let's see here. Yeah, time check. I know, we're already on 10. Waste management? All right. Is that, I'm guessing, yeah, WM. Who is that? Who's that chatting with me? Okay, Night Owl. Damn, dude, you got to chill out with that deep voice, bro. I feel like I need to say yes, sir, All right, waste management. This thing's looking good. Now, this is a very slow stock, guys. You're not going to get rich trading waste management with only 1.3%. This is like your, you might as well buy the S&P 500 if you're going to play waste management. It's very slow. But with that being said, you can see you have this nice downtrend right here. So if it breaks out of this area, this might be a nice area. So I'd keep it on your watch list. If you're into those slower stocks, maybe if you're trying to create a portfolio for a longer term portfolio, something that you can buy and hold on to for a longer time. These aren't buyers or recommendations. These are my ideas. I'm just some guy, just some random guy talking to you. But look at this. If it breaks out of this area and it does it on volume. I like to see this volume dry up before a breakout. So you don't see much volume here right before it breaks out. So if it does break out, it's above all of its moving averages. It's looking very constructive here. Looks like it held up through that big sell-off, so things are looking good. I like Waste Management for a longer term hold. It's very slow mover. So I like that. Guys, we only got a few more minutes here. What I'm going to do is I'm going to take control here. I'm going to go through a few of the stocks that are on my watch list now. I appreciate you guys giving me a few shout outs. I got AMAT, BAC, and TSM. If you guys want to look at a really fast mover, I don't want anybody playing this, but I want to go over it really quick. EBS. The only reason why I'm looking at this, now it's a little extended, but if we look at this on the 5-minute, these are sometimes the more speculative plays. Now this moves 13.3%. It's a biotech, so I would not hold this thing overnight. This is more of a day trade. Okay, so I'm only going to go over this really quick because I don't like to preach for these, but this is one thing I want to look at in case we have anybody out there that likes these very fast movers. This is a trend. Here's a downtrend on the 5-minute. If we throw this on the hourly, you'll see it's very tight here. It looks really, really nice. We had a beautiful uptrend. It's holding most of its movement here from all the way down here from $1.75 up to $4.04. It looks like it's starting to break out in that aftermarket. And if it can continue higher, I'm going to take a small bid on that 4-4 breakout. Next up, we have CRD. No, we're not going to look at CRDL. VKTX, this thing really broke down here, but if it can hold this area, it might look nice. NVAX, I want to go through some of these better names so we're not getting you guys sidetracked here. TOST. If you look at TOST, this is one of those things where it's got that triple top. 1, 2, 3, okay? And it's right here at this area. We'll zoom in on it for you. Boom. This is on its triple top area. So again, we got a big push on volume after earnings, and now it's kind of stuttering in this area. So if it can just hang out here for a little while, let these moving averages catch up, TOST might be an absolute beautiful breakout in these areas. So if it could break above 27.50, that would be absolutely beautiful. We also have BROS, BROS, another rip to the north side. We have this huge area of resistance here, and it's trying to break up through. Its next area of resistance is up here at 38.76. So if it can continue on higher, that would be beautiful. The only issue I have with all these gaps is that it's super extended right now. So we're going to have to wait and see on that. I already have coin on here, and we went over that. One idea I want you guys to keep an eye on is First Solar. First Solar had its base breakout back here. Maybe it can form another base on top of a base. I'd like to see that. We also have CrowdStrike. So CrowdStrike made a nice recovery here. It's got this nice area. If I can see it create a trend or a base breakout in this area, but it's looking constructive. ENPH, I'm just keeping an eye on because this is a faster mover. So the gentleman who was looking at NEE, I believe it was, the energy, this is another one to keep an eye on because if it breaks this trend line to the north side with the overall energy stocks, this is a faster mover at 5.3%. This is one that I really love. So if you're looking at AMAT, this is going to look very similar to AMAT. This is M-chip or microchip technology. And you can see we also have 1, 2, 3, 4, 5, 6 areas of resistance here. And if it can break out of this $94 area on volume, it also moves 2.8%. So it's a little slower. But if it can break out through on volume, I think this thing can really pick up. We have OSCR did an awesome job on earnings, a little extended from the 10-day moving average, but it made a beautiful William O'Neill cup and handle, which you guys know I study every single day. William O'Neill's How to Make Money in Stocks. If you're part of my Discord, it's a must read. It's almost it's about to be mandatory, honestly, a mandatory read before we accept any really questions. But I'm not trying to sound like that. You have to read the book anyway. OSCR looks absolutely beautiful. Beautiful cup, beautiful handle here. Held right on that 10-day, got nice and tight, broke up higher, breaking this area that I call a cup right here. Boom. This would have been your buy area right here. You would have been in the money. The only issue was earnings. Earnings ruins everything. KLG is just one I'm keeping an eye on. It's one that we took a nice 10-day moving average, a nice base breakout here. We made some money as it pulled back. It broke through this 10-day moving average. We stopped out for a nice win. And then when it broke up through it, guess what? It was on earnings, so we got away from it. Put on your watch list AXON. It looks like it's starting to break down, but again, if it can hold this base one more time, and this thing can break out above that $330 area, that would be a good spot. Let me just, let's look at CEG. This is another energy stock. It moves 3.6%. So if you're into energy, CEG needs to put on your watch list. We also have the aviation sector. So I'm going to fly through these guys because I think they're important. So get your pad out, or you can watch this at a later time. HWM, PPA, and AVAV. These are all your drones, all that good stuff. Very, very important. And then of course we already went over NVIDIA. We need to go over the restaurant sector. Wing looks very, very good here, guys. I'm in Wing. If it breaks down below this 10-day moving average, I'll get out. I'm only holding 10 shares of this though. Okay, 10 shares. It found that $400 area and got a nice pullback. We want to see it break out of this area. If it breaks out of this area, I'm going to add to this trade. If it breaks down from this area, I'm going to exit this trade. We also have Chipotle. Okay, Chipotle is leading this sector. We have SG. Keep this on your watch list because this might set up at a humongous. This is not to be ignored, guys. Look at this volume. This volume is absolutely amazing. I mean, it's off the charts. SG is going to be amazing. This could be an amazing mover. Next up is Kava. I've been dying to get into this thing. I haven't found the right time. I took the trade here. It got extended. I exited as it pulled back. I kind of just wish I would have held it now. But here it is. Much, much higher. But what's going to ruin it? Earnings on the 28th. So we're going to have to wait to see what happens there. Earnings is almost over, guys. I think we got one more week of some solid earnings. And then that will be out of the way. And we can play all of our beautiful trades. I hate to run through all that on the last part where we're getting a little crunch for time. It's 10:08 in my area, and I got to get some good rest after a hard workout so that way I can be alert and vigilant in the morning. But I do want to say this, guys, if you have learned anything from me tonight, if you appreciate all of this analysis and all this hard work that goes into doing any of this, go ahead and hit that subscribe button. I would greatly appreciate it. It only takes a second, and it's absolutely free. From there, you can click on my link tree, David Worrell. You can find me on all social medias. You can find me on X, which is Twitter, right? You can find me on Facebook. You can find me on, I don't think I have my Snapchat in there, but I'm in Snapchat. You can find our Discord. It's absolutely free. We meet up every single night at 9 p.m. Eastern, guys. That you don't get that anywhere else. We go through the overall market, and we take good care of you. I let you know. I get you all set up for the next day, and honestly, I do it for me, guys. I do this for me. I want to get myself set up, and if I'm going to do it and I'm going to go over it, I'd rather do it with everybody else too. So hit that subscribe button. I appreciate you guys. Before I go, I'll give 5 more minutes. If anybody has any other questions, you're more than welcome to ask. Let's see. Dan Bob. Yeah, Dan Bob will send you a private message so you can go ahead and join up on that. We're more than happy to have you, brother. Anybody else? Any questions, guys? Alrighty, well, we'll close with this. Thank you so much for being here for me. I really appreciate being here for you. I hope you enjoyed that technical analysis. My name is David Worrell on YouTube. Appreciate you guys. I'm going to put this up in my YouTube so you guys can go ahead and look back on it. It'll be under the video section. I appreciate all the questions, and I really appreciate all the amazing stocks that you guys brought up today. I actually added a few to my watch list. We had AMAT, BAC, TSM, and COIN all brought up today, and a few other ones, some honorable mentions there. So I appreciate you guys. Thank you so much. I hope you have an awesome day, and if you're a mother, happy Mother's Day. Hope you guys have a good night. We'll talk to you soon.